There's been a lot of discussion recently about the idea of a reverse merger, specifically folding SpaceX into Tesla, potentially as part of a larger cascade involving xAI. This concept was initially put forward by Chamath in a July 2025 tweet. What was the core idea driving this, and what kind of entity did he envision?
Polyopedia's vision was driven by an industrial logic he saw emerging from AI. He imagined creating one unified entity focused on consciousness across physical, digital, and even extraterrestrial forms. The idea was to integrate Tesla's advanced AI, autonomy, and robotics capabilities with SpaceX's orbital infrastructure, its Starlink satellite networks, and launch capabilities. He viewed it as a logical next step for these companies.
That's a very ambitious, even futuristic scope for a single company. But how does this speculative vision align with the actual reported plans for SpaceX? Is this merger even a remote possibility right now?
As of January 2026, it remains speculative hype rather than an imminent reality. Recent reports confirm that SpaceX is pursuing its own independent IPO in mid to late 2026, targeting a valuation of $1 to $1.5 trillion. Elon Musk himself has described these IPO reports as, quote, accurate, end quote, emphasizing SpaceX's need for independence to fund its ambitious goals, such as high Starship flight rates, space-based AI data centers, and Mars missions. There have been no credible updates suggesting a shift toward a Tesla reverse merger.
So while the reality is pointing towards separate paths, the concept itself is still intriguing. What are some of the theoretical synergies that make this idea so compelling on paper?
Certainly. Imagine Starlink providing ultra-reliable global connectivity for Tesla's robotaxis and full self-driving fleet. There could also be shared manufacturing expertise, especially for Optimus robots, or the use of orbital computing to boost AI training. It would also consolidate Elon Musk's efforts, potentially reducing his divided attention across multiple companies. These are powerful potential advantages if such a merger could ever happen.
That consolidation point brings us to another interesting layer, Elon Musk's massive 2025 pay package. How would a reverse merger potentially impact the achievement of the aggressive milestones set out in that package, which requires an immense market cap and operational targets?
This is where the idea becomes particularly interesting for Musk. The pay package, approved by shareholders in November 2025, grants him up to about 424 million restricted shares, roughly 12% of Tesla, over 10 years. But it only vests if aggressive market cap thresholds, scaling to $8.5 trillion, and operational goals, like 20 million vehicle deliveries and 1 million Optimus sales, are hit. A reverse merger could accelerate this significantly. SpaceX's Starlink, which is already profitable, with revenue projections of $15 to $24 billion for 2026, would immediately boost the combined entity's EBITDA, giving it a huge head start toward the $50 billion tiers required for the package. Additionally, Starlink could supercharge full self-driving and robotaxi scaling through low-latency data, and SpaceX's manufacturing might could speed up Optimus production and deployment.
So a merger could essentially fast-track the vesting of his pay package and address criticisms about his multi-company focus. However, such a monumental move would undoubtedly face significant practical and regulatory hurdles. What are the major roadblocks to a deal like this?
There are several serious roadblocks. First, antitrust scrutiny would be intense, as you'd be combining two giants in the tech, transport, and space sectors. Then there's massive dilution for existing Tesla shareholders. New shares issued to SpaceX holders could be 60 to 100% or more of the current float. Obtaining shareholder and board approval would be a complex process, likely inviting potential lawsuits, similar to past pay dramas. And, of course, Musk's repeated emphasis on SpaceX's independent focus on Mars missions presents a philosophical obstacle.
Given all these obstacles, let's consider the hypothetical market reaction. If a merger were announced, what would be the immediate and long-term impact on Tesla's stock price, currently trading around $440 to $445 as of early January 2026?
A merger announcement would likely spark a sharp short-term rally, perhaps 30 to 60% or even more, driven by speculation and what's known as fear of missing out. The combined entity, potentially valued at $2.5 to $3 trillion, could sustain gains if the synergies actually deliver faster milestone hits, potentially pushing shares towards $600 to $800 in the following 6 to 12 months due to increased EBITDA and AI breakthroughs. However, that significant dilution would hurt existing shareholders, and execution risks, like regulatory delays or unfavorable terms, could trigger volatility and sell-offs. Long-term, if the merger genuinely accelerated growth and matured multiple pay tranches early, the stock could see 3 to 5 times upside over 3 to 5 years as the entity dominates AI, mobility, and space. Without a merger, Tesla is likely to trade sideways or see more organic growth around its current levels, awaiting its quarterly earnings and autonomy progress.
It seems clear that while the pay package angle makes a merger theoretically more appealing for Musk, the probability of it happening is quite low. It's more of a powerful dream than a likely deal in 2026. Ultimately, separate paths for these two highly ambitious companies appear to be the more likely future.
That's correct. The current trajectory strongly suggests independent growth for both Tesla and SpaceX.
If you found this discussion insightful, share it with someone else who might appreciate it.